As we move from spring to summer, it's a vital time for the sheep industry. We're out on John Galdard's farm talking about his year in farming so far and opportunities and challenges for the future.
Yeah, I think the lambing season has been pretty, it hasn't been a bad spring. There's been odd spells of weather here and there which will have caught people out a little bit, but generally speaking, the spring up to now has been fine. So I would say the lamb crop, is going to be an acceptable crop going forward. The lambs are born now. You've got to look after them. You've got to market them when they're ready, and just get them away. It's no good sort of having lambs that are ready, saying, well, the price isn't good enough, we'll keep them. Next thing you know, they're out of spec, and you've devalued the product further.
Deadweight lamb prices have fallen sharply in recent weeks. For the week to May 2nd, the average SQQ is 387.1 pence per kilogram, 85.9 back compared to last year. The live rings have also seen falls. New season lambs averaged 207.35 during the week to May 2nd, down 37.6 on 2014.
Well, prices have been pretty much trading sideways for a number of years now. I think we've got some sort of concerns what might happen in 2015, mainly on the back of the currency issue. We've seen a big strengthening of sterling with the problems in Greece in the Eurozone, and that's just going to have a downwards pressure on prices, we think.
We can see why things have happened as they have, where the lamb market in January was fairly sound, and February and March it was pretty sound, sounder than we might have thought. The prices were pretty acceptable, irrespective of where the currency rate was, to the extent that possibly a lot of people maybe got a little bit overexcited and thought the job was going to go very strong, the retailers and processors included, and that has resulted in people probably keeping lambs to be too big, out of spec, which has devalued them, along with the retailers and processors probably being a little bit concerned about the shortage, overdone it in the number of lambs coming in from New Zealand, and the combination of the two has depressed the market, and that's where we are at the moment.
With domestic consumption falling, exports are now a vital outlet for the lamb market.
Up to 40% of our national lamb crop has to be exported to clear markets. In domestic terms, then markets, sheep meat is seen as being quite expensive. Consumption has declined by up to 20% over the last 7 years, so exports are really very crucial to our domestic price.
The euro extremely weak, the pound extremely strong, to extremes that we haven't seen for a long time. And that is having considerable effect not just on the sheep market but on many agriculture commodities, and volatility is something that we know we're dealing with and we know we're going to have to deal with. There is two things to profitability of any aspect of agriculture: one, the price you get for the product, and the other, what it has cost you to produce. In many cases we have little influence on what we can do about the cost of the price we get. The cost of production is the area where we've all got to focus.